Hello everyone, welcome back to the FIRL channel, best place for long-term stock investors. Now today it's going to be an exciting topic. We're going to be discussing MJ's success and mistake investing in the stock market. Now, as a disclaimer, none of what we say should be taken as financial advice. If you do need that kind of advice, please talk to a pro. And as another disclaimer, we do own some shares mentioned in this video.
Also, coming on November 3rd, we have a live training just for you if you're interested in learning how you should prepare yourself for 2023 as an investor. As you know, 2022 has been really difficult. We don't want you to continue feeling that pain going into the next year. So hop on to our training. If you're interested to join, you can click on the link in the comment section or the description.
Okay, MJ. So
Yes.
the mistakes that you made in the stock market.
Yeah. So there's actually a lot, but we will be talking about just 5 mistakes and also 5 success stories, right?
Yeah. So actually from the list that you briefly talked to me off camera, right? So you mentioned that there's these 5 mistakes that you actually made. There's minimal research, FOMO, surprisingly, FOMO, impatience,
it's there.
overthinking, and emotion overrule. So I think let's just walk through all of these each one by one, and maybe even tell us a little bit of what stocks do you actually own and you made this mistake. So the first one, minimal research. Okay. Unisem. So what happened?
So some context. Unisem is one of the earliest stocks that I bought. At that point in time, this was probably around, 2017, somewhere here. Right, somewhere here, I would say. If you can tap. So what happened was that the reason I bought it was at that point in time, again, minimal research, as the name suggests. I just said that, hey, it's in the tech sector, so to speak. I didn't know things like EMS. I didn't know the business dynamics of it. I didn't really, push myself to understand. But I thought the tech sector, and then, tech was so-called booming, right? I know it's hard to see now, but back then, right, this chart, right, was very good. So, I got it around here. Right. And then it actually dropped all the way here. So it dropped a lot. So the first mistake here is, yes, minimal research, and so I actually saw it as a loss. I remember it's like something like 35-40% loss here. But a linked mistake is that because I didn't understand, right, I would have actually accumulated more right here because of the business dynamics. Right. And so I would have, profited more handsomely lah, especially in the next tech bull run. So I didn't do enough research on the company and also the industry as a whole. I would have known that somewhere around here would be in the middle, like there will be 2-3 year cycles for these tech companies.
So I assume that, do you know what's happening when it actually dropped like 30-40%?
I think it was just the end of the cycle. So 2018 was, like to what's happening today is very similar to like the early days of 2018. Right.
Okay, so that's your minimal research on Unisem. The next stock that we're going to be looking at is Unity Software, which is a US company. And you say that this mistake you made was actually FOMO. Now please take us through.
So Unity is a software, as it suggests, very linked to the metaverse. Right? Now I didn't do much research actually on Unity. What I did was I just Googled, because I wanted exposure to like metaverse stocks. So what I did was just Googled and I just say, okay, you had this, you had, I think, there's one more company I totally forgot already. I think Roblox, that's probably another one. But yeah, so I decided to get into Unity at around probably here, 150. Something like that.
By the way, by what you mean by metaverse is, can you take us through?
So I mean metaverse is the future where the virtual world and our physical world will be connected. Right. So for example, right now, let's say you walk on the street, right, and there are houses. Now let's say with the metaverse, maybe in the future you'll be able to have like certain glasses that you wear that will be able to show you whether the property is for sale or not and how much for offer. Iron Man? Right? So it's exactly like that. Then you can even see if they allow who's the owner and things like that. So you can see straight away and you can get data They can even show you how many bedrooms, how many square feet.
Can I put it this way? Is that it's an improvised version of the Oculus, the metaverse?
Much better version. So Oculus is virtual reality. So the metaverse will most likely be a mixture of virtual reality and augmented reality.
Augmented, yeah. That was the word, AR. Okay, so anything you want to share?
So the FOMO was that because it was the future, I do still believe it's the future, but I obviously didn't do a lot of research with Unity, and so it down, went from 150 to like 40.
Yeah.
Now the key, and why, even though it's down like so much, I'm okay about it, is because I put a little bit. I was aware of how much FOMO I was having.
Yes.
So that's why the FOMO was limited.
Yeah. Oh, that's great.
Yeah.
I mean, that's one way to actually counter.
But it's still a mistake, don't get me wrong, right? It's
Yes,
still a mistake.
yes. Okay, so the third mistake that you made was impatience. And this is an interesting company because this is a plastic packaging company, Tongguan. Why is that? Why are you impatient about this company?
Now, I bought, again, context. This is the very first stock I bought, which happened to be a mistake also. This was in, I think, okay, to be fair, it's the very first stock I bought when I took investing very seriously. I mean, I bought stocks prior to 2017, but 2017 when I took it very seriously. So you are looking at me buying it around here.
Okay.
So at that point in time, the oil prices were actually quite low after the 2014 crash. So you can see in 2014, right, it was here.
Yes.
It went up a lot. It was still pretty low back in 2016, 17. So I bought it because it was cheap, right? So it was like, I think, anywhere between 8 to 12 times earnings, depending on how you want to calculate. So I bought it, and then it declined by 40%. Then I sold it. Now, again, I knew the company a little bit better. It was in the plastic industry. Oil prices would remain low.
Right.
It's in a good industry, generally speaking. And yet, I wasn't patient enough to either accumulate more here, or I didn't want to see my thesis being played out. Because I knew oil prices would continue to remain low. And if I had added more money here, then obviously today I would be positive rather than losing.
Wait, correct me if I'm wrong. Did this happen when oil prices start to increase?
Not too sure, but I can't remember exactly why it happened. Really, it could be. It could be.
Okay.
So if you think about it, if oil prices move in cycles,
yes, definitely.
So I should have added more obviously.
Yep.
So I was just being impatient. I didn't want to see out my thesis.
Okay, so I think this is the fourth one, I believe.
Yeah.
Overthinking. So Franken, why?
Sure. Like this one, actually, if I would rephrase overthinking, I should use someone would be obsession with valuation. So this was in 2017, right? So it's quite crazy when it was like a few cents only.
Yeah, man.
Not sure how many cents is that. 30 cents maybe.
Okay.
So at like 30 cents, 25 cents, I met the management, I studied the accounts, and I thought, this is a fantastic company and all that. And my issue was that I was overthinking or emphasizing too much on valuation, because at that point in time it was 29 times earnings.
Right.
But what I had failed to realize is that the management, right, the company is in a unique place in the industry where the cycles of the semiconductor industry don't affect them that much.
Yes.
Because no matter what, essentially they are like janitors for
the cleaners are
the cleaners, right?
Yeah.
So they put like maybe certain equipment,
wafer, then they just
put
the
it,
water,
dip it into a chemicals and things like that lah, basically. So that kind of business, is going to be very good, and they're growing like 10 to 15% every year. So in other words, in 5 years' time, your valuation will drop to like 14 times earnings.
Right.
So that's very attractive for such a consistent.
I believe because I did study a little bit about Franken during that time. I think they actually switched like their business segment, like they focus
from
more
oil
on
gas to semiconductor,
from oil and gas to semiconductor, and that's where their profitability actually starts to improve a lot. Also.
Correct. So that's where I overthought lah, and obviously I should have bought. So that is the story of Franken.
All right. So the last one we have here is emotion.
So my G is here, right? So the key moment would be here, 2018, when
the
election, right? For those who don't know, my G is always known to Mr. Wong.
Yes.
Wong TS Wong. Is known to be linked with the Najib family quite a lot, specifically the wife, Rosma. And when they were kicked out of power, the perception of the market is that MyG is going to lose their business.
Yeah.
And so Now, I actually didn't lose money or make money on this. The mistake here is one of omission, meaning I should have bought right here. Because I had enough information, right, that the business will not lose out. Right? Yep. It will still be, it's still going to be very linked to the government. The government's not going to get rid of them because road taxes and, foreign worker permits and all that. It's absolutely crucial. And in order for the government, the new government, the PH government, to change MyEG, they would need to actually retender and go through the whole process. Maybe take a year, 2 years. Like, they've got many things on their plate. Why would they even bother with MyEG lah? So I had enough information to know that there are technical barriers and of course psychological barriers to get rid of MyEG. Didn't take action down here. Yep. Which would have yielded me, I would want to say roughly 120% gain. And I still remember I was looking at it, I was like, wow, okay, very scary. So the emotions was overruling my rationality.
Okay. Thank you so much for being so open on your mistakes. I mean, it's definitely worth learning also from MJ's mistakes. Hopefully you guys actually get to learn some tips or two based on MJ's investing experience on his mistakes. And next we'll look at his success stories.
Yay. Alright guys, if you didn't know, we have a one-on-one mentorship program where you can apply for, where we level up your stock investing based on tailor-made solutions. If you're interested, you need to apply. Not all of you all will get into an interview. It's only 20% of you all will do it, and even fewer will get to hop on the program. But if you're confident that you can qualify, you can click on the link and fill in your details in the comment section or the description.
Right. So now we're going to be looking at something even more exciting, which is how much money the MJ actually made. No, just kidding. It's not going to disclose. But anyway, so this is some of his success story on what stock he actually invested and actually yielded very handsome gains in his investing experience. So there's 5 stocks, or actually I'd rather say 5 companies here: Notion, Dufu, Supermax, VTEC, and as well as Nestle, Milo. Okay, so please walk us through one by one. I will start off with this interesting company, Notion.
Yeah. So Notion VTEC is actually not a very, let's put it, it's not a really high quality company, and I don't mean that in a bad way. I just mean that it's a company that struggled to produce consistent cash flows because of the way the business is structured, right? So they have CNC machines, and these machines can do many things.
Yeah.
But they've changed like key clients very often throughout their history, and the proof is in the pudding, right? You look at the chart, right? It's a lot of ups and downs. Now, the key thing to look at actually would be here. So in 2018, what happened? You see this decline here?
Yep.
What happened was that they experienced a fire which actually wiped out, I think, one of their 2 main factories, and it was lucky for them, it was an older one.
Okay.
So all the old machines got burned,
Okay.
in that sense. And so obviously there's a lot of fear, so it dropped from like nearly about like 80 cents to something like 30 over cents, right? So it's a 50-60 percent decline. And what happened is this: so when it fell down here, we know that actually the management had already prepared insurance for fire insurance, right, for that. So they will be receiving cash that will more than cover actually their losses. So what happened was that at that point in time, the cash that was coming in, right, the total amount plus the existing cash they had was more than the market cap at this point.
Oh, that's really interesting.
Right. So for me, it was a no-brainer. I didn't know how much I would make, but I know that it has a okay business.
Yeah.
But it's trading for cash.
Yeah.
So I bought it around here, and then I was patient enough to hold it until I sell it almost the top here lah. I obviously didn't put it into here. I mean, but so I think I pocketed roughly a almost 100% gain on this stock in a matter of maybe I want to say 2.5 years.
This is a very interesting way of looking at analyzing businesses.
Yep.
I mean, one is who actually will talk about insurance, right? I mean, one is the insurance, and then the other thing is I think rarely any investors in Malaysia actually talk about, which is the cash. Yeah. It's more than what they are trading for, like their market cap.
So what's interesting is that even if you didn't know about insurance, if you follow the company's announcements, they actually tell you how much they're receiving in insurance. So they say we've received, I can't remember the exact numbers on the top of my head, so I'm just paraphrasing. We have received 8 million this quarter, we are due another this. So you can calculate from there, add with the cash, then you know roughly how much is it. And at the meantime, the other factory was still functioning. Yes, their revenue got cut in half, but the profits is still coming in, you see. So, so it's a very different way of investing, obviously. But
it's actually a very interesting method of analyzing companies. Right?
Correct.
Okay, let's go to the next one. I definitely learned something from Notion, which is to pay attention more onto their balance sheet. One thing, one key thing. So the next one we have Dufu Technology.
So Dufu is actually a company that I bought when let me think about it. So it's also a company that we highlight this very clearly in our SIB program. If you guys want to check it out, either send us a DM on Instagram and email, or you can check out in the comment section or the what do you call that? The description. So it's a very long story, but basically Dufu is actually a competitor to Notion, but they are a much more efficient competitor. In fact, based on my scuttlebutt talking to engineers who are actually working with both Dufu and Notion, they realized Dufu's deliveries are a lot better, less faulty issues and things like that. But what is unique is not merely that they're more efficient and they're more reliable, but the kind of products that they were producing for the HDD space, right? For the storage space was linked to cloud computing. Now, I won't go into the technicalities. I explained this all actually in our video that we did a couple of years ago, or if you are in SIB, you'll know exactly a lot more details about this analysis. But they were into that sort of business, and so imagine the components, right, would scale with as cloud computing grows, whereas someone like Notion or another competitor, JCY, don't have that kind of component, right? Again, I know it's very it's hard to imagine, but just take my word for it right now. So I did that, then I checked the financials, solid. It's growing like 10-15%, maybe even more every year. And then I looked at the industry. It's actually tracking the industry growth of cloud computing. So cloud computing is like 15% of that. Dufu is the same. Then it's run by Taiwanese people. So they are known to be very generous with their dividends, and also they are very good capital allocators, Uchitech shareholders. You know what I'm talking about. So they got into that business, and at that point in time, I was looking at 3 companies, right? It was Notion, JCY, and Dufu. And look, JCY bleeding money, Notion here and there, but Dufu consistently profitable and growing, and the cheapest. Right?
Wow.
So it's the cheapest company by valuation. So I thought, okay, let me put in money. So this was around here. 2018. Right. So you're looking at 40 cents, 55 cents. So at the peak, I believe my gains was like an 11-12x, and then now obviously it's probably now 5 or 6x. But I did make a mistake on this, is because very few times you find companies like Dufu where the very good financials growing and cheap. So my mistake was that I didn't bet bigger when I should have. I put in too small an amount.
See guys, hidden gem in Bursa Malaysia. Bursa, not even in US. 11x your money. Okay. So the next one we have here is once a darling among retail investors. So
Supermax is very straightforward. When I was looking at the glove companies, this was actually before COVID even happened. This was late 2019, November, like that. I knew gloves was growing at 10-15% every year, so in demand. ASPs at that point in time was quite stable, and so but yet despite that, the interest in gloves was actually very low, right? Again, and it's very hard to remember, think about it, but back in the day, you see here,
actually I did study about Top Glove, but back then the interest wasn't
very low.
There's nothing,
right? Very, very low. So I just say, look, I want some exposure to gloves, and then I just say, okay, look, what are the available options? In fact, I didn't even study Kosan, but the top 4 I didn't look at Comfort and all these others. But the top 4, I didn't consider Kosan, but I was considering Hartalega, Top Glove, and Supermax. I decided to not go for Hartalega for reasons that I will explain maybe in a future video. but I went for Top Glove and Supermax.
Right.
So now Supermax specifically not because to add the context, right? Actually, Supermax among these three is I would say the worst in terms of their efficiency, in terms of their growth potential and all that, compared to Hartalega and Top Glove, right? But what got me interested is the fact that they were the cheapest. So I thought, I'm just well positioned. And to be fair, even though this is a quote-unquote success story, I would call this actually a very luck-based.
Because it's happened
I didn't see COVID
right?
would succeed, right? But this stock was actually from my lowest buy to when I saw it was an 11x. However, where I think I made the best decision here is not merely to pick Supermax and all that, but it's actually to average up. So when I bought it around here, 2019 probably here, when it went up here, I actually added more capital. Then I sold off probably somewhere here lah. So that was the thing that actually made all my returns in 2020 lah. To be fair, so that's Supermax lah.
Okay.
So again, I want to be honest that actually luck played a big role lah.
Yes. Okay, so the next company we have here is hold on, JFTech.
Yeah, so JFTech is also luck because I had a friend who was really into this sort of companies. I would have known this if he didn't talk about this. So he introduced me to this. They were they are involved in a lot of test sockets and all these electronic components that were linked to the communication industry. Or at least that was my perception. They were actually in the midst of clearing off a legal battle with a US company who sued them for patent infringement, something like that. And so when you took away all that and you look at the kind of profits and the kind of industry they're linked to, which is 5G link, they look like an interesting proposition. And they were also in talks. I'm not sure whether I think it's really public. They were linked with a very famous Chinese telecommunication companies. No points for guessing what company that is. So they were linked to that, and all these things were, really, really good. And so again, I bought it somewhere around here. I would say maybe here, maybe here. And then I sold it probably just before 2021 started. So I didn't ride the wave all the way through.
Right.
That's JFTech.
Okay, the last one we have on the list here, it is, I believe, is Nestle.
Yeah, so Nestle, I started accumulating here. So this is 69, 68, 69 around there.
Nice.
It's really a no-brainer stock at that point in time. It was trading for 25 times earnings. I don't hold the stock anymore because at 50 odd times right now, 45, 50 times earnings, doesn't make sense.
Right.
But the interesting thing about Nestle is that it was always below the KLCI 30, even though it's such a big company at something like 20, almost 30 billion market cap at that point in time. And what happened was that one of the companies fell out of the KLCI, and then Nestle was climbing slowly, right? It's one of those stocks like in share price, right? You can see here, I go like 6 to 8% every year, excluding dividends. But this spike here happened because suddenly they've been included into the KLCI 30. And so a lot of institutions, both local and foreign, now are forced to buy Nestle. And so that's why the share price pumped up a lot. So once it pumped up to 150, then it dropped down to 130 over, and then when it bounced back up to like 145, I decided to sell it because I don't think the valuations are attractive to me anymore. But of course, I could be wrong.
The valuation cannot keep up with the fundamentals. Put it this way. Will you put it?
Fundamentals cannot keep up with the valuation.
Fundamentals cannot keep up with the valuation. Okay, all right. That's a really interesting story on his gains and mistakes. So what can we take away from this discussion? Well, the first thing is that you definitely know this. 90% of investors will not beat the index. By index, what we mean is it could be the US index. The US index, I believe it yields around like 8% to 10% per annum. So 90% of you guys cannot actually beat the index. So that's a fun fact, statistics for you to know. And another thing is that 50% of your stocks you buy will lose money at least. And
usually,
And in the case for MJ, it kind of like happened, right? So it's justified here.
And the cool thing is that you don't need to, if you get half right most of the time, right, you actually do very well, because assuming you don't short stocks, the worst that a stock can go for you is 100%.
Yes.
The best is
Unlimited.
infinity, right?
Yes, yes. And the last bit we have here is 7% of your stocks you buy will produce half of your returns.
Yep.
So that's a pretty interesting stats. You can put it out here. Any final thoughts you want to share, MJ?
Nope.
All right. Okay. So I think that's about it for today's video. If you like this sort of video, make sure you smash the like and subscribe button. Share this to your friends or family. I mean, this is the first video that we actually disclose what stocks we kind of used to own. We used to hold, and our mistakes and actually MJ's mistakes and success in his investing journey. And follow us on our Instagram, Telegram, Discord, all those good stuff. And we'll see you in the next video.
Bye-bye.